Hi everyone, I'm Paul and welcome to episode 4 of my vlog on building a trading system. Today's video is going to be a really quick one. This is a live trade using the London Open model that I've been testing on my vlog, and this particular setup was a textbook long entry and it delivered a 3R return. Now this video and the vlog in particular will be super helpful to anyone who's trying to apply ICT's concepts from the 2022 YouTube Mentorship but can't trade that New York Open. So that's my position. I can't trade that because that's about midnight my time, and so I've been trying to apply those concepts to the different kill zones that ICT uses, and so this video is all about using the Asian range and the London Open. So I hope this video is going to be helpful to anyone who's in that situation. If not, it's still really helpful to see some of ICT's concepts in action. So please like this video, that'll help other people to find it. And if you're enjoying my videos, please make sure you subscribe to my channel and turn on notifications so that you never miss an update. Now let's jump into today's trade. So this is a trade I have running on the London Open model that I've been testing for the last couple of weeks. So I'll just run through the actual setup of that now. You can see I've got my time zone set to UTC -4, which is New York just there. And so this is my Asian range. So this is from 7 o'clock right till midnight New York time. So that's the Asian range there in this yellow box. And what I do just as part of my method is I mark out the low of that session and the high of that session. And what I'm looking for is a run into either that buy side liquidity or sell side liquidity as we come into London. Now, what I do is I mark out then the midnight open and I just draw that across. And then we're waiting for our London open session to start. So that's from 2 o'clock in the morning to 5 a.m. New York time. And so you can see what's happened here, and this is a textbook setup, is the markets run up. We've come then down through the midnight open and we trade down into that sell side liquidity, and then we're looking for a reversal once we've taken out all those stops and a run to the upside. So if I zoom into my 5-minute chart, you can just see this formation just a little bit better. So you can see we get this run through the midnight open, a little bit of consolidation, and then we get this big displacement down. You can see we take out the sell side liquidity here. You can see we're also taking out the sell side liquidity here as we've just shot through down into this zone here. And we've then had a little bit of consolidation down at this level. You can see we didn't come down and take out this liquidity down here. We've only just come down to here and we've started to reverse. So once we've started to consolidate around this area, that's when we zoom in and we start looking for our setup. So if we zoom in, actually this is on the 2-minute chart. So you can see it gets a little bit spotty, but you can still see the formation quite clearly. So you can see the market's sort of come down, we've dived into that sell side liquidity, we've run back up, we've filled a little bit of this imbalance, we've also got all these gaps here. The market's come back down, run up a little bit again, we've spiked down lower, taken out the lows here again. You can see we then get this displacement higher, so we have these big move upwards, and you can see this is where we break market structure on this move, and this is where our fair value gaps form. So it's not the prettiest setup. You can see we have 1, 2, 3 candles here, and our fair value gap is between the low of that third candle and the high of this first candle. So the fair value gap's running across the body of that second candle just there. So in terms of my entry, I've put my limit on the low of that third candle just there, and my stop at the low of that second candle there. And what I'm looking for is about a 3R return. So you can see that would take us almost back to the midnight open, and that's generally sort of where I would look to target as a place to come back to. But what I should always be looking for is where is the liquidity going to draw towards. So you can see we've got these imbalances here, so I'd expect that we'll start to fill those in as we come up, and you can see we've got buy side liquidity that will be residing above these highs here and this buy side liquidity up here. So I don't want to be too greedy. This is already moving quite nicely in my favor, so I'm going to target somewhere around this midnight open, hopefully get a 3R return. So we'll just see how it goes. The first sort of point that I'm looking to achieve is to take out the liquidity here. So once we take out this swing high here, I'd hope that we'll get a little bit of a run, and that should then push us up to our target just above that midnight open. So you can see we're starting to move up towards the swing high just here. So it's pretty spotty, but I'm expecting once we punch through that swing high level here, we should get a bit of a push, and that should start to send us close to this midnight open. We might get a little bit of consolidation around these levels, hopefully poke through that midnight open. It's almost a bit like a mean reversion type trade as we run into that New York Open in a few more hours. There you go, we can see we've just spiked through that level now. We'll just see if we just get a little bit of a run. We'll start to approach that midnight open level again. Getting a little bit extended, so I wouldn't be surprised if we consolidate maybe around this level before potentially going again, but you never know, we might just push through just in one go. So we're through that midnight open level now. Got about 30 seconds before this candle closes. Pretty close to target. There's a good chance we might go through on the next candle. We'll get another follow through. It's likely that the liquidity will target these levels up here. That's why I'm sort of happy just to take, these imbalances just underneath where this liquidity is going to draw to. Hopefully it pushes through that and I just get picked up on the way through. So that's my theory. I'm not going to get too greedy. I'm not going to try and take everything out of the trade. More than happy to just have a more certain exit just before where that liquidity will be targeting. Painfully close now. So we're just on that next candle now. Hopefully we get a little push up and then we'll be out of the trade, and that's a pretty nice 3-hour return. And there we go, out 3 hours. So just do another quick review of just the whole setup again, and we'll just sort of maybe come back and revisit it just before we finish off the video, just to see where that liquidity's ended up targeting before it maybe reverses. But you can see that trade, we're only in it for quite a short period of time, so maybe 1, 2, 3, 4, 5, 6, 7, 8, 9, say 10 candles, 2 minutes, so 20 minutes, 3 hour. And you can just see how simple this setup is. This is really textbook for the London Open, so pretty happy with that trade. So let's just run back through again. So you can see we have our Asian session and our London sessions marked. So remember, Asia is from 7 o'clock in the evening till midnight New York time, always working off New York time. We've marked out our buy side liquidity and sell side liquidity. So these are the highs and the lows of the Asian range. And so this is basically what we're really targeting. Now, I've talked about in previous videos, often if you get the liquidity of a previous session taken out as well. So if this move had taken out both this sell side liquidity and maybe this sell side liquidity as well, you tend to get an outsized move in response to that, but we don't need to get that to get a successful trade. You can see we've taken out that sell side liquidity here, and we've obviously had a pretty good trade on the back of that. So we don't need to see that, but it certainly seems that if you take out the liquidity at a lower level from a previous session, that makes it, a more powerful setup. So you can see this is the candle at midnight. We just run that across and that gives us our midnight open. And then we have our London Open or our London Killzone, which is from 2 o'clock till 5 o'clock. And so what we're looking for from our London Killzone is we want to see, in this case, the market run above the midnight open, come down through the midnight open, take out the sell side liquidity, and then reverse and then run back, towards the midnight open or some other relevant level in terms of attacking liquidity. So if we zoom in now to our 5-minute chart, so again, you can see the market traded above the midnight open. We've come down through that. We've created a short-term low here. So we've got our swing low here. The market's come back up. And then you can see we've crashed back through that. So we have this displacement lower. You can see the power of these candles. We take out the sell side liquidity here. We have sort of relative equal lows, if you like, here and here. So if we just mark that out to make that a bit clearer. So So sell side liquidity, relative equal lows here. So this move's taken out all of those stops, and then we've taken out then this sell side liquidity here. You can see once we've done that, we've started to consolidate. Once we get into this consolidation pattern, that's our signal to start to zoom in and see if we can find setups. Now, I couldn't find one. 3 minutes is the time frame I like to look for setups on Bitcoin. I just find the candles are a bit cleaner and a bit easier to spot. 2 minutes works okay, and 1 minute, if you look at this, it gets really difficult to read. This is obviously still perfectly fine. You can see the candles, but I just like to have something with a bit more substance, and I find that just a little bit easier to read, and it just makes me a bit more confident trading the chart looking like this. So this is our fair value gap here. So 1, 2, 3 candles. So this is our bullish fair value gap. So our bullish imbalance would be here. Just mark that out so it's nice and easy to see. You can see that here. There's lots of ways to highlight, did we break market structure? You can see we've actually got a little swing high here that we've broken with this move just here. And we've also, obviously, this swing high is more prominent. You can see this move here has broken that. So this whole move has broken that as well. So we have a break in market structure here, but this is really the one that I'm working off just here. So we've broken market structure here. We have this candle, this second candle, which is the one that gives us the displacement that we're looking for. And in terms of entering that trade, we've used the low of the third candle, and our stop has been down here on the low of the second candle. Now, you can obviously use the first or the second candle or a relevant swing low if you like. In this instance, because the second candle is actually lower, that's the one we're obviously going to use. You can see the market has then come back in on the very next candle. We've traded into it. You can see we've barely, taken any heat on that trade at all. So we've gotten in here at around 741, and it's gone down to, 727. So, not very much heat on that trade at all. And then you can see it's just run in our favor pretty much the whole way. We had a little bit of consolidation here before it took off. We've taken out this swing high here, any buy side liquidity there. We've taken that out. We hit the midnight open, and then we shot through. Now, if we come back and look at this trade again, you can see we didn't quite take out the buy side liquidity here. Now, it may consolidate around this midnight open level. That's not something that I think would be unexpected. You can see we're getting another, pretty powerful up close candle there. So it's quite possible that this move will continue on and attack the liquidity up here, and then maybe eventually this buy side liquidity, which was the high of the Asian range. But from our perspective, that doesn't really matter. We're just after the low hanging fruit. So you could easily have taken a partial at this level here, and then the rest around here, or maybe you take a partial here and let the rest run. It's sort of up to you how you want to do it. From my perspective, I just like to keep it quite simple. I'm just more than happy to go in, take that position, and then just take it all off in one go. So we'll just give this a few moments longer and just sort of see if we take out that liquidity. I'm just interested to see if we do or not. That's sort of what I'm expecting will happen. You can see we're back above that midnight open level now. We've already taken out the liquidity here. Will we take it out here? We can clean up the chart a little bit and just come in at a slightly higher time frame, even the 5 minute to make it even clearer. And I wouldn't be surprised if we take out this level here. That will take out this buy side liquidity up here. Or I might finish up the video right there. I've had a few people in comments asking me a little bit about the session times and so on, so hopefully that's answered those questions. And this is just another really great example of that London Open model that I've been testing in my vlog. And as you can see, super simple setup. This one was textbook. Hopefully that helps you for those people who aren't able to trade the New York Open like I am, just because of time zone. So for me, this is about 5:30 in the afternoon. So for me, this is a really handy time to be trading. It's easy to sort of get some good screen time without getting any interruptions or anything like that. And as you can see, the fair value gap model and the 2022 YouTube Mentorship model translates really well to that London Open session. You just have to look for this particular setup and use the Asian range as a way of determining where your buy side and sell side liquidity resides. So I was just about to finish up editing the video and I went back to have a look at the chart to sort of see what happened. Now, as you can see, we have taken out that buy side liquidity that I talked about in the video. So that was the high of the Asian range, and you can see the market's just continued to charge on from there. So this is obviously why potentially taking a partial and letting the rest run can really pay off. And this is another really good example of ICT's power of three. So if you recall, the London Killzone is often when the high or the low of the day will be printed. And so in this case, we'd anticipate that this was now the low of the day. So if we think about what our daily candle will look like, sorry, that's not the best drawing ever, but imagine this is now going to be, we'd anticipate an up day. So we've now opened, so we've opened here. Now we have our manipulation downwards and we have the low of the day here printed in London. So we have accumulation between the open and the low. Then we have manipulation higher, and then between the close and the high of the day is where we're going to have distribution. So this is another way that we can use the London Open to help us anticipate what will happen in the rest of the session. So we can assume now that this is the low of the day and we can trade in the rest of the session accordingly. So there you go. There was a live trade on the London Open in Bitcoin. I hope you found that video helpful. If you did, it would be great if you could like it, because that helps other people to find it. And if you're enjoying this vlog, make sure you subscribe to my channel and turn on notifications so that you never miss an update. Thanks for watching, and I'll see you on the next video.